Hello, and welcome to another edition of CMS Forex News. I'm CMS Market Analyst Nick Nassad. Today is Wednesday, September 24th, 2008. We begin in New Zealand, where the WMI Consumer Confidence Index showed a strong result for the third quarter. The index jumped from a 17-year low of 81.7 back to optimistic territory at 104.8. The recovery was broadly based and was led by improvements in forward-looking sentiments, lower petrol prices, and a reduction in interest rates. Consumers reported more willingness to spend, which should help the economy. The New Zealand dollar-US dollar pair, which fell in favor of the greenback yesterday, found buyers again following the positive consumer confidence release. Commodities, which slid yesterday, regained their footing as well. Today's move amounted to a 100 pip swing from low to high. In Germany, the IFO Business Climate Index decreased further in September, the fifth month it has declined. The index fell to 92.9 from 94.8, which was below economists' forecasts, and the lowest the index has been since May of 2005. Both current conditions and expectations decreased as the Eurozone economy continues to face pressures as a result of high inflation and low availability of credit. The current account deficit for the Eurozone narrowed to 1.7 billion euros in July from an upwardly revised 6.1 billion deficit in June. The improvement has to do with larger surplus in services and income transfers, which offset deficits in current transfers and trade in goods. The UK CBI Distributive Trade Survey, which measures sales of retailers, contracted sharply for the third straight month in September, although the decline was less than feared. Supermarket sales were strong and prevented a more dismal figure. 21% of the retailers reported higher sales and 48% reported lower sales, resulting in a net negative 27% figure. Retail continues to be weak due to an ailing economy and cautious consumers, though the easing of oil prices should help at the pump. The CBI noted a cutback in luxury items as well as items related to the struggling housing market. Motor vehicles also saw significant declines in sales. The Euro-Pound pair saw choppy trading following the poor IFO release from the Eurozone. French utility giant EDF sealed a deal to take over British Energy. The move, which helps to secure UK's nuclear energy future, boosted the pound to start the European trading session. The euro rose against the yen despite the weaker IFO data, as the Federal Reserve agreed to provide central banks with more cash to increase lending, which helped boost risk appetite. Also, news that Warren Buffett would purchase $5 billion worth of Goldman Sachs stock helped higher yielders against the yen. The euro tested the 156.20 level, capping a 150 pip climb from its intraday low. Still, the moves are tempered as traders and investors continue to mull the proposed $700 billion bailout package proposed by Treasury Secretary Paulson. In the U.S., existing home sales declined more than expected to an annualized pace of 4.91 million. That was a 2.2% drop compared to July. Buyers are still looking for cheaper deals, and so falling housing prices are not acting to form a bottom. Inventories had been running high, which is also acting to drive down prices, though August saw inventories fall 7% to 4.26 million, which represented a 10.4-month supply at the current sales pace. There was a 10.9-month supply at the end of July. The large drop in inventories may help stabilize prices going forward. The dollar-yen pair rose overnight, fell at the start of New York trading, but managed to brush off the weaker housing data and move back to test its highs. There is a line of support setting up which favors the greenback, but overall current price action is indicative of consolidation. U.S. stocks are trading very choppy, with key indexes going between positive and negative throughout the day. In testimony today, Bernanke said a failure to unfreeze credit markets will pose a grave threat to the economy. Buffett's move gave the markets an indication that the plan would pass, otherwise he would not have moved to buy up the preferred stock of Goldman. After announcing his resignation, South African Finance Minister Trevor Manuel told Washington earlier that he is more than prepared to serve in the same post for the new government. The US dollar-South African rand pair dropped swiftly after this statement. The volume was thin due to a closed market as today is a South African holiday. After the 1200 pip drop set an intraday low at about 8.07, the dollar-rand pair rebounded to 8.1275, reversing half of its earlier move. Tonight, Japan will release its corporate service price index and its trade balance, while Australia posts its leading index. That is followed overnight by data on German consumer confidence. Tomorrow morning, the U.S. releases weekly jobless claims, its durable goods orders, and new home sales. And that wraps it up for this day in Forex news. Join us again tomorrow, right here at cmsfx.com.